Good morning, good afternoon, good evening, depending on where you are in the world. I'm Nicolas Véron. It's my pleasure to introduce this session of the financial statement series at the Peterson Institute with Sergei Guriev and Jacob Kirkegaard, who has adjusted his camera. I will introduce them briefly before we get to the conversation, of course, about the impact of the war in Ukraine on Russia and beyond following the invasion almost a month ago. Sergei Guriev was born in Vladikavkaz in North Ossetia. Interestingly for our topic, he went to high school in Kiev under the Soviet Union, of course, and then in 1993, he got his master's degree in economics and computer science from the Moscow Institute of Physics and Technology, which I have to say for me is an intimidating qualification. He then got a PhD in applied mathematics in 1994 and later on a doctorate of science in 2002 from the Russian Academy of Sciences, and also a postdoc year in 97-98 at MIT in the Department of Economics. In 1998, Sergei Guriev joined a new economic school in Moscow. He became the rector in 2004 after a one-year visiting position at Princeton in 2003 and 2004. And he developed the new economic school into the leading, that's my assessment, leading economic research institute and higher education institute in Russia, which was a remarkable success story, which unfortunately didn't survive the further turmoil in Russia into 2010s. In 2013, he was interrogated, I think, by the relevant organs or services and left Russia for France, where he became a professor of economics at Sciences Po in Paris, where he still is to this day, after a stint at the European Bank of Reconstruction and Development in London as chief economist from 2016 to 2019. Sergei Guriev has had major activities and impact in several aspects. I will mention just a few. He has been, in his years in Russia, particularly from 2008 to 2013, a member of a number of policy bodies for the Russian government, a Council on Science, Education, and Technology, the Commission on National Projects, and maybe ironically, given what happened later, the Commission on Open Government in 2012-2013. He has also been a board member in a number of Russian companies, including Sberbank, the largest bank in Russia, from 2008 to 2014. He has been an active participant in the public debate in Russia as a columnist for Vedomosti, the main economic daily for Forbes Russia, also during that decade between 2003 and 2013. And following his departure from Russia, I think also importantly, he's been an advisor to Mr. Navalny in the opposition, starting in 2013, actually, when Mr. Navalny was campaigning for mayor of Moscow. Also joining us today will be Jacob Kirkegaard, senior fellow at the Peterson Institute and also at the German Marshall Fund in Brussels. Jacob got his degree in political science from the University of Aarhus in Denmark in 1999. He had an early career as a military intelligence officer for Denmark, then got his master's in international affairs, at Columbia University, SIPA, in 2002, and his PhD in political economy at Johns Hopkins in 2013. He joined the Peterson Institute for International Economics in 2002 and has been with us ever since, including on a joint assignment with the German Marshall Fund since 2020. With that, Sergei, over to you.
Thank you very much, Nicolas. I will talk for 10 minutes and I'll show some slides. Basically, what I'm going to talk about is what the sanctions did to the Russian economy and Russian financial system. Now, one has to quickly say a few words about what Russia was before the war, because the impact on the financial system was completely unexpected. Why? Because before the war, Russian economy was not growing, it was stagnating. If anything, it was growing at 1% per year, in some years 2% per year. And the reason for that was very simple. Mr. Putin built a system which is corrupt, dominated by the state and business people who are connected to him. So we shouldn't have been surprised that there was a major outflow of capital, a lack of investment, and stagnating or even falling household income. So if you actually look at the evolution of household incomes, the last time Russia was, the last and only year Russia was a high-income country was 2013. And since then, in the 7 years, GDP has grown very little, while incomes actually have come down by about 10% in real terms. However, macro situation, financial situation was not bad. There were several pillars of macroeconomic stability, which are quite normal for a developed country, but kind of rare for emerging economies. So, for example, if you compare Russian macro to Turkish macroeconomic framework, there is really a huge difference. So Russia had a conservative fiscal policy where the budget is balanced at $44 per barrel. Oil price, actually, if you look at fiscal monitor, last fiscal monitor, October 2021, Russia is the only big economy which was foreseen to have balanced budget in years 2022, 23, 24. Of course, it's now outdated, but still. Russia has very little debt, and sovereign debt is just 20%, and out of that, only 5% is external debt. Also, if you look at the total corporate and bank and government external debt is just 30% of GDP. It used to have large currency reserves, about 40% of GDP, and had a large sovereign wealth fund, 12% of GDP. So Russia moved to inflation targeting in 2014, flexible exchange rate. It cleaned up its banking system. So it was a fortress Russia, as people would call it, in macroeconomic sense. So Mr. Putin didn't share his ideas of invading Ukraine with his economic policy team, and I will say a few words about that. But overall, before the war, it was clear that, well, economy is not growing, but at least macroeconomic meltdown is unlikely. So why am I talking about this? Because it's also important to remember what drives Mr. Putin's policies. And he cares about Russia's incomes. He cares about macroeconomic stability. But what matters to him a lot is his approval rating. And here is the approval rating in the last 10 years or so. And here you see that his approval was coming down before annexation of Crimea. Why? Because these are the years when his system ran out of sources of growth, and growth started to slow down even before 2014 annexation of Crimea and war in the East Ukraine. But then he annexes Crimea in a short victorious war, and his approval rating jumps from 60 to 90. And then it is up there for a while, and then he raises retirement age, incomes keep going down, and so his ratings are collapsing again. And so he's now at historically low level of ratings. I can talk more about why that has happened and so on, but he needs a new short victorious war, and this is probably what explains what we've seen. And actually, interestingly, his recent ultimatum to NATO, tensions, concentration of troops, have actually had to raise his approval from 60 to 70. Just to give you some background on this, this is an independent pollster. And of course, you have problems with response rates and stuff, but this is an independent pollster, and people are asked whether you approve or disapprove Mr. Putin's policies. And so you see
just a clarification on this slide. When is the last data point? Was it before or after the invasion?
This is before the invasion. Yeah.
Okay, thank you.
So this is before the invasion. So the data after the invasion, I'm happy to talk about this, are much less informative, because a week after invasion, Mr. Putin introduced pretty much wartime censorship. And so when people call you and say, do you approve Mr. Putin's war? You know that if you say no, you can actually go to jail for up to 15 years. So the quality of poll data are different, but yeah, that's where we are. So one thing I would mention, people talk about the sanctions in 2014. So research we have suggests that these sanctions had an impact, but much smaller than people usually think. We talk about, in total, the level effect is 1 percentage point of GDP. So if not for the sanctions introduced in 2014, Russian growth would be 0.2 percentage point per year higher during 5 years, something like this. So it was not huge. And this is also what reinforced Putin's belief that the new round of sanctions may be in the same magnitude and intensity, and so he can survive that. But that is not what happened. This is exactly what not happened. Sanctions went much further, and sanctions were much more much more united in terms of the West. Even Switzerland joined certain sanctions, and Switzerland has always been neutral. So, for example, Switzerland didn't join sanctions in 2014, and so when Russia retaliated to European sanctions with a food embargo, you could not buy French cheese or Italian cheese, but you could still buy Swiss cheese in Russia, which was a big loophole for cheese lovers in Russia. Anyway, so sanctions were priced in. So this is very important. We talk about financial markets. Financial markets have some probability of future crisis, and basically ruble has lost quite a bit before the war, and stock price index also lost quite a bit before the war. And the leaks that we have from discussions in policy-making circles suggest that Russian economic policy team did not expect sanctions on the reserves, but thought that the nuclear option would be Russia being switched off SWIFT. And Russia has actually built a certain domestic substitute for SWIFT, which seems to function more or less right now. So within Russia, the payments function exactly because since 2014, Russia's been building up the replacement. Now, the most important shock came on the third day of war, which was sanctions against Russian central bank, and that pretty much froze all the reserves. Nominally, only half of the reserves were stored in Western currencies, while about 40% in gold and yuan. And yet we see that even this part of the reserves is unlikely to be usable because if central bank is sanctioned, even Chinese banks or other non-Western banks will not touch Russian central bank, fearing secondary sanctions. So that's where we are. So one of the key pillars of financial stability was just removed overnight, and that was a painful shock. Now, you also had comprehensive export controls. So Russia is cut off Taiwanese microchips. It cannot maintain its Boeings and Airbuses. Some software companies are saying they will not update software. And so there is also an exodus of about 450 companies from Russia. There is a list on Yale School of Management website. Now, what is the impact right now? Well, ruble lost about 30%. And when people say that's not a lot, let me give you this chart. So ruble lost only 30%, but oil price is much higher than it was. So if we thought about ruble where it should have been when oil price is where it is now, ruble should have been 3 times as strong. So this is something that people don't appreciate. To what extent, if you look at the correlation between oil price and ruble, ruble should not be at 100 rubles per dollar. It should be at 30 rubles per dollar if you think in terms of where it should have been given the oil price. But yet you still have this movement in the first several days of the shock, which is the loss of about 30%. Now, the central bank immediately raised key policy rate to 20%. It introduced many currency controls. It immediately closed currency exchange and stock market. So now currency exchange is reopened, but not everybody can participate in currency trading. The exporters are forced to sell 80% of their export revenues in the stock exchange. Foreigners are not allowed into in currency exchange. Stock market is going to reopen tomorrow. Again, foreigners cannot trade. Short sales are banned. So it's still not completely functioning, but at least it's going to reopen tomorrow, hopefully. Now, inflation has been 2% per week. So this is something that people don't fully understand. People talk about how inflation year on year is 10% or 12%, but what is more important, you need to look at the day per day and week by week. And so today they will publish the data, so I'm running out of time, data on the inflation for the last 7 days, but the first 2 weeks were 2% per week. 2% per week is 10% per month. And so that is going to be quite a shock. And a lot of people complain that many prices actually doubled, which is normal given that many prices are priced to imported goods and imported goods are gone. Now, economic impact is huge. So there is still no oil and gas embargo by Europe. It has been discussed in many capitals. Biden is coming to Europe this week to talk about that with the European Council, but it's still not boycotted. But it is boycotted by private sector. Total, of all people, of all companies, stopped buying Russian oil. And Shell and BP did that way earlier. Chinese banks are not financing purchases of Russian oil, being afraid of secondary sanctions. So this is a huge issue, and Russian oil already trades in a huge discount to Brent. And the informal estimates suggest that already now about half of Russian oil is not sellable. And International Energy Agency has a forecast that in April about 3 million barrels per day will be not sold, will be not exported. And then the exodus of foreign companies also undermines all kinds of businesses, including, for example, the largest Russian car maker, AvtoVAZ, which just stopped production because it doesn't have chips, cannot produce cars, right? So the GDP forecasts are your own guess. So Institute for International Finance says minus 15% in 2022. Within Russia, people talk about minus 8%. But nobody really knows. If it's minus 11 or 15%, then it's the worst recession since early 1990s. 2008-9 was not as bad, but 1998 was not as bad. So this is where we are. Now, in the longer run, there is a great uncertainty to what extent China will be able to substitute technology, intermediate inputs, and finance. Not clear. We will see that Europe will exit Russian oil and gas in the matter of a year or two, I would say. And then, of course, we have a huge outflow of human capital. So, for example, official discussions, so members of parliament talk about 70,000 IT specialists live in Russia in the months. Some people say that in total, the flight was 200,000. Some people would say 500,000 people who've left in this 1 month during the war. And these are the middle-class Russians, educated Russians. So this is going to have a huge shock on Russian development perspectives. So what's going to happen next? Well, oil and gas embargo in Europe, that is important. Sanctions on Sberbank, which is still limited, may happen. So the big question is whether the flow of oil revenues is continuing or not. If Russia restores its ability to export oil, Russian fiscal problems are solved, Russian balance of payments problems are solved, because imports will collapse, and at the $100 per barrel, even with the $30 discount, Russia will have enough petrodollars. So then the next question is China. If China somehow joins the sanctions, then we are really into a territory which we've not seen before. If China stops exporting intermediate inputs and technology to Russia, Russia will be in a humanitarian crisis. Food, medicines is something that Russians will not be able to afford, and so it'll be something new. Will that change Russian politics? Mr. Putin's calculus? We don't know. All the elites are unhappy. Today, the news is that Mr. Chubais, who is a very significant figure, a political survivor whose last job was, no kidding, Mr. Putin's advisor for cooperation with international organizations. Okay, this job is no meaning anymore. So he left Russia today. And I guess it was not easy, but he managed to escape. However, the politics has changed dramatically. So in terms of our book, which I highly recommend, which comes out on April 5th in the US, Mr. Putin, who used to be a spin dictator who was using, who pretended to be a Democrat, who used information manipulation, hidden censorship, targeted repression, is now moving into a fear dictator, old style model where he uses wartime censorship, shut down independent media, is closing down social networks one by one, and starts talking about, I'm not kidding, he publicly says national traitors, he publicly says final solution. So we are really back to 1939. And in that sense, I think it's not clear how many weeks, months, or years it will take to remove him from power, even given all this huge financial and economic impacts. So I'll stop here, and we'll take your questions later. Thanks.
Right. That was superb. Jacob, over to you.
Well, thank you very much. No, Sergei, that was just tour de force. I guess I will start with a little bit on the sort of comprehensive and multifaceted aspect of the sanctions and how it, in my opinion, interplays with the glaring hole in these sanctions, which is, of course, European energy sanctions. I mean, I think if you start with the technology sanctions, I think it's really important to recognize that this isn't just the US, it isn't just the EU, it's the G7 plus the other quote unquote major Asian producers of, you mentioned high tech, chips, South Korea, Singapore, etc. So it really is, in that sense, all the advanced democracies going up against Russia and banning high-tech imports. And you mentioned that AutoVAZ has stopped. I mean, I saw a report also that that Russia's only, or at least largest tank manufacturer has also been forced to stop production. So there is a tendency here, or there is a real, even short-term impact of these technology sanctions. And I think it's the same with at least the foreign exchange reserves. I mean, you mentioned Switzerland joined. That means that all of the major reserve currencies, with the exception, of course, of the renminbi, have joined, which again I think is worth remembering, because also if we think forward, if you're China and you have $3 trillion worth of foreign exchange reserve in one of these major traded currencies or gold, you would think that this is something that you would pay attention to also when you may or may not consider your own future aggression against a neighboring island. And then, I think that really this voluntary aspect of Western sanctions, namely that, you can call it weaponized ESG or brand awareness. It's pretty clear that a lot of companies have left. I mean, just today I saw, and as a Dane, that makes me slightly happy, that Maersk is cutting all ties with Russia. I think that's pretty significant in terms of also managing the logistics of Russian external trade in general. But certainly the withdrawal of all these Western brands and others is perhaps going to have just as big an impact on the average lifestyle of the Russian urban middle class as the hyperinflation, because a lot of these products are just not going to be there anymore. So there is clearly, I think, a moral suasion element there. But then you leave us with the energy sanctions, and there, this is the glaring hole. But I think there's a really interesting twist out today. When Vladimir Putin is quoted in the financial press as saying that Russia from now on will demand that unfriendly countries, I assume that would include the EU, if they want to continue to purchase energy and certainly gas, they have to pay it in rubles, which presumably would force Germany and other major importers of Russian gas to go directly into foreign exchange markets and actually buy Russian rubles, which presumably would raise some problems given that the central bank is sanctioned, these transactions with it is sanctioned, and so are some of the other major Russian banks. So how this will actually play out, but it certainly is a way, I would say, of Vladimir Putin to at least raise the costs of not implementing energy sanctions on Russia. Because you saw earlier today, Chancellor Scholz in the Bundestag basically say, look, Germany is not going to impose energy sanctions on Russia, basically because it's too costly for ourselves and we wouldn't be able to sustain it. Well, I guess Mr. Putin, perhaps having seen that statement in the Bundestag, well said, okay, thank you very much. Then it is risk-free for me to demand payment in rubles and essentially, potentially significantly complicate the enforcement also of many of the financial sanctions on Russia. And certainly, at least potentially, I would argue, would also potentially boost the exchange rate of the ruble. So this also tells you a little bit about the still, I think, remarkable degree of indecision among European leaders on this issue. And then finally, I think there is one other important aspect of this going forward, which is that, when Joe Biden comes to Brussels tomorrow, he's going to obviously want energy sanctions on Russia. It's clearly to do all the things that Sergei described, further push the Russian economy into economic crisis in the short run. But it's also, I think, very clearly from an American perspective, with an eye towards China, because the lack of China, German and other European countries willing to actually bear any costs of imposing economic sanction on an aggressor country like Russia should be good news to China, because if Germany isn't willing to accept any cost of breaking sanctions with Russia, so on energy sanctions, well, is it going to face the consequences of retaliation from Beijing, given its important exposure to the Chinese market, if Beijing were going to, invade Taiwan? I think the answer so far, at least, is clearly no, and which is precisely why Joe Biden is going to want to come and ask for that. Right. So I think there is, therefore, this is a glaring hole, but and I think that a lot of it also has, a lot of relevance to how we think about strategic rivalry with China in the long run. Well, let me stop there.
Sergei, Jacob made that point, which I think is very relevant right now, that there is this feeling that the Europeans did a lot in the first few days, and especially, as you mentioned, the really impactful sanctions on the central bank, and that was decided very quickly. But now they're kind of reverting to default settings of, short-termism and narrow special interest and bickering and inability to coordinate. Is that the way you view it, or do you have a more positive assessment? And how do you see the current state of European discussions?
Nicolas, I think oil embargo in Europe is a hard decision. It's objectively a difficult decision, and I am not surprised it's not been taken as of now. But I also see a lot of movement in the discussions. I already see that some capitals are more prepared to do that, some are not, and of course, much depends on your dependence on Russian gas and oil. Much depends on your distance and number to the conflict and number of refugees. Just to remind you the numbers, 10 million people are displaced, which is a quarter of the country, and 3.5 million, including 3.5 million who are displaced cross-border. So this is a huge, huge crisis. It's bigger already, much bigger than Syrian refugee crisis. And so I think the public opinion is very clear, including in Germany, public opinion supports oil embargo. The other thing, since we are economists, German economists are actually also very clear. They ran estimates and they showed that embargo is not going to be as costly as German politicians say. And the debate is actually very interesting. German economists run estimates and produce numbers and say the costs are substantial, but not catastrophic. German politicians say the costs are catastrophic, but I will not give you numbers.
You're referring to the study by the Leopoldina Institute, right?
Yes, exactly. But there are 2 or 3 studies. Some of them are actually confidential, so I saw them and I cannot refer to them. But they arrive at similar conclusions. But in any event, and we wrote an op-ed in German with my colleague Oleg Tschoki, a professor at UCLA, who is one of the leading figures in international trade. So Oleg and I wrote an op-ed for Spiegel where we said, look, there is also an economic argument for oil embargo because the war is costly to European economy. Wake up to this reality. Every additional week of war costs you, European politicians, you, European consumers, additional dollars and additional euros. And so moving fast may actually be good. And now I think the discussion is becoming very pragmatic. So I think the question is when, the question is how. And it's, for example, plausible that Europe introduces oil embargo, but not the gas embargo. And instead of gas embargo, there'll be a tax on Russian gas. If you impose a tax, then the tax exports from Russia will go down a lot, depending on the tax, and then they will hit everybody more or less uniformly. And if you are dependent more on Russian gas, you will continue to buy it. You will pay more. So these things are now on the table, and the discussion is very, very concrete, which I think is a good idea. And I fully agree with Jacob that today's announcement that Russia wants rubles for its gas exports also suggests, and here let me say that this is something that I think my knowledge of Mr. Putin can be useful. I think he just knows for some reason that embargo is actually coming, and he wants to preempt it. And it's a bit like Russia exited Council of Europe last week before it was kicked out, like a couple of hours before he was kicked out, it was kicked out. So maybe he's doing the same here. So he knows that there will be some kind of embargo and he wants to preempt it. So this is where we are. And just to, since we are on this, just a couple of things. Will Russia default on its external debt? So far, Russia's not defaulted. Russia has enough dollars to not default unless there is oil embargo. If there is oil embargo, Russia may default. It is a non-event. Russian external debt is not large. I think only in April, Russia has to pay $2 billion, which is, again, not large. The rest are coupons. And then for Russia, it's also a non-event because all the meltdown has already happened in the financial system. And then it has no implications for Russia's future ability to borrow because it will be cut by sanctions anyway. So,
Sergei insists, let me channel my colleague Anna Gelpern here. Can this argument not be flipped on its side and reversed? Because why should Russia spend $2 billion if its creditworthiness doesn't matter? So why are they honoring their debt at this point?
I fully agree. I fully agree. It's just an inertia for some reason. So $2 billion is somewhat like 2 or 3 days worth of what Europe pays Russia for oil and gas. So, so it's not much money anyway. But I fully agree with you. All the rating agencies now rank Russian debt either one notch above default or selective default or default. So, yeah.
Jacob, Sergei alluded to the refugee crisis and the massive numbers which dwarfs the 2015 crisis with the Syrian and other refugees. You've worked a lot on that. Can you tell us your assessment of how the EU has been reacting so far? What kind of challenges or indeed opportunities do you see down the line? And whether basically this is something to worry about in terms of all kinds of dimensions, including political risk inside the European Union?
Yeah, no, I mean, I think so far I would give the EU very high remarks for their actions on refugees. Basically took a collective decision to open up their borders. Obviously, the initial inflow was predominantly to the immediately neighboring countries, first and foremost Poland. And I think there again, we should certainly highlight that, literally tens of thousands of Russian households took in Ukrainian families. So from that perspective, so far, so good. There was an announcement, and by the way, of course, the contrast to the situation in 2014, 2015, of course, is night and day. So that certainly also, in my opinion, represents a degree of progress. Now, today there was an announcement by the Commission that they're proposing a sort of slightly archaic budget maneuver. They're taking 3.4 billion euros from the React EU, which is basically part of the next generation EU funds that were appropriated, during the COVID recession, and going to front load them and basically pay them to particularly the frontline states, which of course overwhelmingly will mean Poland in the short run. Now, 3.4 billion euros is not pocket change. It will quite likely make a real difference. But at the same time, of course, because it is Poland and another frontline country is Hungary, there is an issue of how the Commission and indeed the EU addresses additional flow of funds for refugee receptions to these two countries in the sort of rule of law issue, which of course is a long-standing problem and has blocked EU financial flows to these two governments, at least for the last couple of years. We don't quite know what that is, but the bottom line is that the EU is being creative with the budget, trying to find money to channel for refugee reception, in the very short term. Doesn't change the fact, in my opinion, that by doing so, by taking essentially COVID money, Next Generation EU, they are invariably cannibalizing other priorities of the EU. Now, this is quite natural, but in the long run, I don't think you can get out of the fact that, in my opinion at least, the EU faces new challenges because of the war. One of it is refugees, and the other one has to do with paying for this aggressive cutting off of Russian energy imports. These were common European decisions, and they should certainly therefore also have, in my opinion, common European funding behind them, even if that discussion seems to be less rapid than we could have hoped.
So that's great. Thank you. We have a lot of questions coming in from the audience. Actually, the questions that are already on the Q&A are enough to keep us busy until the end of the hour, and I'm sure we'll get more. So I will ask you to make responses from now as succinct as possible, and I know there's a lot to discuss, so that we can cover as many as possible of the questions. Sergei, I want to start with a question about the European banking sanctions, because we mentioned, the feelings that there is some cold feet or backpedaling in Europe. Actually, when you look at the sanctions on the Russian banks, as opposed to the central bank, they're very mild. The European Union has only sanctioned about one quarter of the Russian banking system, if my estimates are correct. How important is that? Can you give us a sense of whether it would make a difference if the EU was to ramp up its sanctions on the Russian banking system, and also the current situation of credit allocation inside Russia, which I guess is very much Sberbank, but you may want to elaborate on this, and whether there is any credit allocation that works in the Russian economy right now?
So, Nicolas, I think we shouldn't forget about secondary sanctions. EU doesn't need to introduce sanctions on somebody who's already sanctioned by the US. So if the US introduce full blocking sanctions on a bank, this bank is a toxic counterpart everywhere in the West. There is no question about this. You are not in Paris, but I am. And so near me, there are many offices of BNP Paribas, which broke American sanctions previously and had to pay $9 billion fine, right? So nobody wants to try that. Even Chinese banks know this story, right? So I think this is not as important. I should also tell you that EU sanctioned a lot of oligarchs, and some of them are sanctioned by the EU later, much later actually, by the UK. And some of them are still not sanctioned by the US. So there is this offensive, and I think the way it works is EU, UK, US move in different directions, then call each other and say, sorry, I'm behind you on this dimension, you're behind me on that dimension, let's coordinate and stuff. But things move so quickly that this is how it works. I was talking to somebody who was just sanctioned by the EU and said, I have ironclad guarantees that UK will not sanction me. And I said, whoever gave you these guarantees gave it to you 3 days ago, but things may change. And 2 days later, he was sanctioned by the UK. So these things happen very quickly, and I won't really say that EU is too soft. It's just coordination problems are there. That's normal. But I think the public opinion is outraged, and people see refugees everywhere. So this is a big difference with the Syrian refugees, because Ukrainians have visa-free access to Europe. Ukrainians have temporary protection, and so Ukrainians arrive in Paris as well. And so the whole Europe is taken to the street to protest against the war and welcome the refugees, and the public outrage will force European leaders to do that. So talking about internal finance in Russia, so the banking system still functions, but interest rate is 20%. That means lots of businesses will be cut off of financing, and you'll have the second round of financial shocks, where certain businesses will suddenly see that, well, it's not working well, right? It's the financial market stopped. Same applies to mortgages. Mortgage rates will be now 20+%, so mortgage market will also be in trouble. And so much depends on how Russian government reacts with fiscal measures. Now, if there is oil embargo, Russian government doesn't have fiscal capacity. So there is a lot of uncertainty there. But within Russia, payments function. Within Russia, banks still exist. No major bank has collapsed. Part of that is also because the central bank introduced a lot of controls. And if you asked me a year ago, is it possible that Russia freezes all currency deposits, which is what has happened? You can take out more than $10,000 from your currency account. I would say that would be a huge riot, a huge protest. But by now, as I mentioned, the internal politics is completely repressive, back to Stalinist times in a sense, back to at least late Soviet Union times. So people don't dare to protest. And so many things happen which I thought are impossible. But yes, banks are still functioning.
Jacob, we have questions from Mazar Minovi and Arnab Das on the ceasefire scenario, and there is a lot of chatter on this in the investor community. Is there a possibility that if a ceasefire is agreed by Ukraine and Russia together, some of the sanctions would be withdrawn? How do you look at this? Jacob first and then Sergei.
I would be very skeptical about the prospects of a lasting ceasefire because as I read it, this is a war that, this is almost sort of 1905, the Russian war against Japan. It was supposed to be easy. I mean, Sergei mentioned at the beginning, it was supposed to be a quick, victorious war. It's obviously anything but that. It's turning into a military disaster potentially for Russia. I don't see, therefore, that Russia can accept a ceasefire for those political reasons. Meanwhile, of course, if you believe some of the latest from the Ukrainian side, they are, 98% of Ukrainians or something like that believe they can win. They're counterattacking. So they have very little reason, in my opinion, therefore, to also go for a ceasefire. And even if I'm wrong, I can't imagine any of these sanctions be lifted by the West until all Russian troops have left, Ukraine, certainly gone back to the pre-February 24th borders, which is the same as saying that the actionable item on sanctions is not a ceasefire, it's a actual peace treaty. Which I think it's fair to say it has much longer prospects, and certainly developments on the ground right now do not point in that direction.
Right. Two weeks ago, you interviewed Ihor Ustenko, the economic advisor to President Zelensky for the Peterson Institute, Jacob, and he was not really in ceasefire mood 2 weeks ago. He probably isn't now.
No, absolutely not. I mean, if you look at the verified equipment losses, etc., obviously huge uncertainty. But again, if polling suggests that 90+% of Ukrainians think they will win, they can win, there's no way President Zelensky can enter into a ceasefire at this stage.
Right. Sergei, how do you look at the ceasefire scenario? Because I know that a lot of people on financial markets are trying to speculate on, in all senses of the word, on this possibility.
Right. I fully agree with Jacob. Just one thing I would mention: Ukraine is fully winning the information war, at least in the Western public opinion, and that may mean that we overestimate Ukrainian success. And I fully trust Jacob's judgment, and I think we've seen no movement on the front lines for a couple of weeks by now. But I fully agree with what Jacob has said. I see another scenario, though. So first and foremost, I would mention that in the scenario that Jacob mentioned about peace treaty, the West and Ukraine will also ask for reparations. And so peace treaty would probably involve using some of the frozen Russian assets to be repaid as reparations. That is not impossible, but that is a catastrophic outcome for Mr. Putin. So he comes back to Russians and say, we gained 0 inches of Ukrainian territory, and we also lost a lot of money. So it's not something I would see as Mr. Putin can be doing. What I can see as a realistic scenario is at some point he says, we have won, we have defended our Ukrainian or Russian-speaking Ukrainian brothers, and we'll leave the border where it is now at the moment of this decision. So he'll probably take Mariupol and keep Mariupol. He may keep Kherson, and so he will have a land bridge if he has Mariupol, this is why it's so critical. If he keeps Mariupol, he has a land bridge between Crimea and East Ukraine. He can cover the water supply to Crimea. So this kind of stuff. And then he goes back and says, we won. And the West says, sorry, we don't accept that. This is not a peace treaty and no sanctions will be lifted. So I think this is not an impossible scenario.
On a related matter, important matter, Alice Chernokova is asking about your personal knowledge of Mr. Putin, because you have seen him a couple of years ago. So she says, there's a lot of media reports that Putin has lost his mind, has miscalculated, is making irrational decisions. How do you look at that debate?
So lost his mind and miscalculated are different things, right? One story is Putin is irrational and crazy. The other one is he's miscalculated. And I believe he's miscalculated. I think Mr. Putin is trying to stay in power. I showed you this popularity rating. He wants a boost to his popularity. And he, as Jacob correctly said, wanted a short victorious war. And then what happens to a dictator who's in power for a while? You surround yourself with yes men, you kick out people who stand up to you, you suppress independent media, and so you don't have a public debate which points out at your mistakes. And so suddenly you are very misinformed. You overestimate the strength of your army, you underestimate how Ukrainians hate you. Mr. Putin has spent a lot of money on supporting pro-Russian forces in Ukraine, but then now we see that some of these forces actually say, we don't like you, Mr. Putin. So the party, which was supposed to be a pro-Russian party, is actually standing up against Mr. Putin as we speak. So he may have been misinformed, and he made a huge mistake. And I honestly think that what he's done has dramatically shortened his political life. I'm pretty sure that without this war, he would stay in power longer. No. How much longer than he would do now? And again, I don't know whether he will stay in power for 2 years, 10 years, or 2 months, but that's definitely shorter than without this war. So in that sense, I would say miscalculated.
So there's a follow-up question from Mazi Arminovi on the ceasefire or, end of hostilities scenario, because, and I'm not surprised because I hear a lot of that from investors, specifically this week, that everybody's playing that scenario. I'm personally skeptical, as you are, that there can be such a situation, but let's have the follow-up question. If there was an agreed pullback, and I think Maziar here assumes that the Ukrainian government would agree on some form of terms, and he says it holds for 3 months, then would meaningful EU sanctions be reversed, or 6 months, or 12 months? To both of you, does the question make sense to you? And what would be your answer?
I mean, I can start. No, I mean, I think you can imagine all sorts of things, but again, public opinion and facts on the ground right now doesn't, to me at least, suggest that the Ukrainians are necessarily clamoring for a negotiated or an immediate ceasefire. But even if it does, even if I'm wrong, it's again, we know from sanctions in general, certainly within the European Council, that you're going to have somebody stand up and block the continuation of them or the extension of them, and that I think will be very difficult for any EU leader to do, with literally still millions of Ukrainians in the EU, because just because there's a ceasefire doesn't mean that refugees can meaningfully go home. Their country is still in ruins, etc. And I absolutely agree with Sergei. I don't think the sanctions are going to be lifted on Russia, also for the reason that the EU knows very well that the only other pot of money available seriously for reconstruction of Ukraine is Russian foreign exchange reserves. If Russian foreign exchange reserves are not to be used, most of the money is going to come from the EU. So the EU has a very clear financial interest, in my opinion, in continuing sanctions until Russia would agree to, as Sergei says, at least use some of these for rebuilding.
And thank you for the TV moment. Sergei, I saw you nodding. Do you agree?
Yeah, I fully agree. Have nothing to add.
Okay, so let's move on to China. There is a question from Eric Eldhagen and a number of other questions here on the China-Russia relationship. And obviously, that's an absolutely critical parameter here. Eric says the Chinese foreign secretary is in Delhi to coordinate approaches. Right now, they look likely to try to stay on the fence. What is the likelihood and ability of actors and countries to stay semi-neutral, as opposed to be pushed into a war with us or against us, like the US is pushing for? So there's a huge array of questions here. Sergei, how do you look at China?
So I would actually suggest to you that you organize an event on China in this conflict, because in the Peterson Institute you have many more people who understand China better than I do.
That's right, but it can be difficult to find Chinese speakers these days.
That's correct. That's correct. Chinese speakers who speak on those issues suddenly become unavailable for comment later on, right? So we saw that. But we know that China is not interested in this war, because China wants Europe to be a prosperous market. And right now, Europe may go into recession in the second quarter. China doesn't like violation of territorial integrity of anybody. Whoever recognizes Donetsk may create a precedent for somebody else recognizing Taiwan. And so China is on the fence. China doesn't like sanctions. But one of the things I think we will have easier time to respond to your question is after Biden's visit. If there is some measure of unity emerging between US and EU out of this week's visit to Europe, it will be much easier for the West to bring China on board somehow. And I think that's where we are. But I won't really speculate. I'm pretty sure that big Chinese companies will not violate American sanctions. However, it could be workarounds through small Chinese companies to supply chips, to supply components for tanks. Jacob was exactly right that Russia cannot produce tanks without imported components. So this is a big secret.
Wait, how is that possible? We thought they had prepared forces for years and they don't have spare parts for 3 weeks. How is that imaginable?
No, they have spare parts for 3 weeks, but in the longer run, they cannot produce it. Yeah, they will, by the way, they will seize Boeings and Airbuses. And the Minister of Transportation said we will continue fly them domestically. And then somebody stood up and said, sorry, but that means they will never fly outside of Russia, because if you don't maintain them according to Boeing protocol, then they're illegally maintained. And so the Minister of Transportation said, don't worry, we will fly them, and then we'll use some of them for being sources of parts for others. So, and China actually said, we will not supply to you Boeings and Airbuses parts. So these things are very complex, and this is something where I would actually encourage you to talk to people who are more knowledgeable than I am.
Jacob on China?
No, I mean, I think Sergei is absolutely right. I mean, there is no internationally sophisticated Chinese company that's going to choose the Russian market over access to all the advanced economies in the world. It's essentially the same logic that caused many European countries to leave Iran out of fear of losing the US market. And so I absolutely agree with that. And I think, ultimately there's, as I said, I think it's going to be difficult for Xi Jinping to withdraw politically from his alliance with Russia, because from his point of view, it's, basically one of his few friends standing up against the United States. But the commercial logic facing individual Chinese businesses is very different. And I completely agree. I don't see, and I think this is also what we're seeing. The most sophisticated Chinese companies are not jumping in to filling any voids, etc., in the Russian market. And then just very quickly on the tank production issue, this just highlights the dangers of a government of hiding your military plans from your own population. Similar to what Sergei said on the economic policymakers, they weren't expecting an invasion, where clearly neither were the tank manufacturers. So they stockpiled very little.
So moving on to escalation, we have questions from Arnab Das and also one from Paolo Zanghieri on, let me read Arnab's question. Given that Putin has paid this enormous upfront cost, economic and reputational and everything, things don't seem to be going according to plan. Stalinist dictatorship. How does this support the US views that Putin will double down and escalate to chemical or even nuclear weapons? If so, what are the consequences? Let's think the unthinkable here. Sergei, what's your framework of thinking about this impossible question?
So on consequences, I will leave it to Jacob. On Putin's preparedness to use chemical or nuclear weapons, I have no doubt. he will. If he needs, he will use chemical weapons. And if he knows that he can pull it off, or at least he can have a chance to pull it off, he will use nuclear weapons. He has, this is not a person, this is not your average person who has moral constraints, as we saw in Syria, for example.
Yeah, I mean, on the reaction, I mean, I think if you take the Western reaction or the Obama administration reaction to the red line in Syria, was basically to bomb some of the Syrian units that were using, I mean, the sort of, you know, cruise missile option. I think at a very minimum, you're going to see that as well. It's very difficult for me to imagine that Western public opinion will stand for chemical weapons being used in a European country. So were Putin to do this, along what Sergei said, it would, in my opinion, absolutely take this conflict into a new and very dangerous territory, because, you know, you think this line of escalation through, and you quickly end up in the sort of statistic that Russia has a lot more tactical nuclear weapons than does NATO. Which is a really, you know, a kind of thought process that you don't want to have. But as I said, I don't believe that if there is a usage of chemical weapons on the civilian population, which invariably would be the case in Ukraine, that NATO would keep on the sideline. I don't think public opinion will stand for that.
Sobering thoughts. Let me revert to something which is more of a comfort zone for economists. A question from Stavros Zenios and bunch of other questions on the Q&A on the consequences for the international monetary system. How do you think about that? I mean, there was this unprecedented, as both of you have mentioned, the unprecedented action by all the convertible reserve currency issuing jurisdictions in the world. And that changes the way we think about the safety of international reserves, right? Some commentators have even called that a default, which may or may not be appropriate, but saying that, you know, you thought you had convertible currency and you no longer have it. What does that mean for China? What does that mean for other countries? How do you think about the kind of precedent effect of that, Sergei?
So I talked a lot to central bankers about this, and they are all worried about this issue. But first, not every country wants to repeat what Putin is doing, right? So second, what is the alternative? Where do you store your reserves, if not in dollars and euros? So Russia actually, before the war, and again, this is fully in line with what Jacob said, Russian central bankers didn't know what Putin is going to do. So they thought we need to diversify our risks and move from dollars to euros. And they did. They moved a lot of reserves from dollars, away from dollars, but they put them in euros and Swiss francs. And so the choice is limited. It's still very far from us seeing some other currency replacing the Western currencies. So I just don't see that happening in any foreseeable future. Will China face the same problem if it invades Taiwan? That I don't know, but it may. And a lot of people say that this war is a very costly way to teach China what can happen if that happens.
Jacob?
Yeah, no, I mean, I agree with that. I mean, I think that because there isn't any real alternative anywhere in the world to the freely traded convertible existing reserve currencies, that puts China in a pickle, right? They already have very large foreign exchange reserves. They are currently suffering a problem with domestic demand in China from, you know, a stagnating real estate market and other things. And I think this basically highlights that there is an entirely new layer of geopolitical risks associated. Certainly, if you are a would-be aggressor. But more generally, also, there is a new layer of current, you know, geopolitical risk associated with countries having very large foreign exchange reserves, which I think is an added factor to this issue of whether or not a country adopts an export-led growth peg currency strategy to accumulate these in the first place. So I think you could perhaps see a general decline in the years ahead of the overall global quantity of foreign exchange reserves, which I think right now is about, what is it, like $12 trillion or something like that. I think this is a new layer of risk associated with that.
Final question to you, Sergei. We discussed the reaction of NATO and the West if there is escalation. How do you see, and maybe you, I mean, I don't know if you will want to answer that, but how do you see China reacting to a military escalation in Ukraine?
So again, not a great question for me. I was not a COVID expert last year. I'm not a military expert this year. So I think somebody else needs to take this question. I think China doesn't want to be part of this war. It's very unlikely that China will supply military equipment to Russia, but also China will not send soldiers to defend Ukraine from Russia. So I think China will want to stay neutral. To add to what Jacob has said, yes, Mr. Xi invested a lot of his political capital in partnership with Mr. Putin, which may actually be costly for him right now within China. It's a difficult year for Mr. Xi. And we see some indications that within the standing committee, there are different views. And so we don't know, but this is where my Chinese knowledge ends. So I would rather be talking about COVID numbers than about politics within standing committee in China.
Well, actually, even that answer is fascinating because it raises so many questions that we will, as you suggested, reserve for future sessions. Many thanks to Sergei Guriev and Jacob van Kirkegaard for what I thought was an extremely rich session on the burning issues of the day. We will continue on similar issues in the next session, which will be in 3 weeks, not 2 weeks as usual. So on April 13, with Valeria Gontareva, the former governor of the Central Bank of Ukraine, who has a lot of in-depth knowledge of the ground situation. So I look forward to seeing many of you there. I apologize to some of my colleagues, actually, Adnan Manzareh, Stavros Zenios, who asked for the floor. I didn't have time to give them the microphone. I apologize also to many others who asked questions on the Q&A. We had to be short of time given the quality of our speakers today. Many thanks again, Sergei, Jacob, for an extraordinarily rich conversation.
Thank you very much. And I would just add that Valeria Gontareva is one of the heroes of Ukrainian reforms. And in that sense, she is really a hero. She stood up for modern monetary and financial policy and suffered physically for that. And actually her house in Kiev was burned by somebody connected to corrupt oligarchs she tried to stand up to. So this is somebody who shows how economists can actually make a real impact. And I'm really envying you, looking forward to the session in 2 weeks. Thanks.
April 13. Thanks again, Sergei, Jacob, and all of you who participated. Have a great rest of your day.
Thank you.